Hey everybody, this is Ray Halstead and Patricia Nass with REH CPA. Today we want to talk about the One Big Beautiful Bill. We did a video a couple weeks ago on the effects of individual taxation. Today we want to talk about its effects on business taxation. I've got Patty here with me today. Patty, what can you tell us? What were some of the biggest changes with this bill for business taxation?
Sure. So I can kind of go through a few of them. So one of the biggest things is the QBI deduction. So that's the qualified business income deduction. And that was supposed to be phased out. Now, many people might not realize this was giving you a 20% deduction off your net income from your business that you didn't have to pay tax on. So that would have added back a lot of income tax to people if they had to pay on their whole net income. So they did expand that so that it will continue on. They said it's permanent now, so you don't really need to worry about it.
That's nice.
And then what they also did was add is as long as you have $1,000 of net income, then they're giving you a $400 QBI deduction. So, if you had $1,000 in net income, it normally would be $200 deduction. So they just gave that little minimum deduction there.
Nice. So what about assets and depreciation? Any changes there?
Yeah. So the bonus depreciation, that's another big one too. A lot of people, buy expensive equipment and stuff and want to be able to depreciate it right away. So that was limited this past year to 60% in 2024 and 40% in 2025. Well, what they did was they changed that. So now it's 100% eligible to be deducted immediately. So that allows you, buy a big piece of equipment, take the deduction right away. So that's back to 100% bonus depreciation.
Okay. What about credits? Been any changes in credits?
The tip credit has changed. So the tip credit used to just be for restaurants. Now it's beauty services as well. So any beauty service where you would normally receive a tip. So let's say barbers, hair salons, even bath and spa treatments and stuff like that you customarily tip in. Those businesses now are eligible for tip credits. And what that means is when an employee is paid a tip and it's included in their wages, then the employer gets a portion of the
Social Security
and Medicare taxes back as a credit to them.
It's actually a really good credit. So that's a big deal for everybody who has, beauty salon, hair salons, things like that. That's a pretty big deal.
Yeah. And then the other big item that they've done is the research and experimental costs. So those you used to have to amortize over 5 years if it was domestic, or it'd be 15 years if it was foreign. So what they've allowed is if you're doing research and development, you're paying other companies to do it for you, those expenses you can now immediately deduct in the first year as long as they're domestic. So they're trying to keep everything in the United States. And so again, what you would have had to amortize over a few years, now you get to take that deduction right away in the year that you're paying for it. There is also an option, if you want, you can elect to amortize it. If let's say, you have something that you're going to have income over the next few years that you want to offset, it might be a wise choice to kind of plan that out and see when you really want to take those expenses. But now you have the option.
Well, really good information, Patty. If you have any questions on how the One Big Beautiful Bill affected your business taxes, feel free to give us a call. Thanks.